Going to get worse, as Mike Wilson said, and maybe it's not. But what I see from you is buying more and buying a lot more, buying more Microsoft, buying more Facebook, buying J&J and Apple and Tencent and Baba, which I said reports this week, and Pfizer. That's a lot. What does that say about your view of the market?
I can't find anywhere else to put money that's competitive. I'm not going to put it in fixed income, even though I believe the 10-year will be at 2% by the end of this year, just because of inflationary pressures of whatever stimulus package we get. As far as this correction goes and why I continue to buy, we're in a pause that refreshes, mostly driven by the fact there's some concerns about how fast this virus gets squashed. It doesn't look like it's going to be as easy as we planned. Logistics issues. Now that Biden's fully in control, he owns the issue. And every day we hear the update on where we can get vaccines, where we can't. In addition, there's a big spread in the stimulus package. You know, I love kumbaya politics, and you get it for one day when you hear the inaugural speech. And after that, it's back to business as usual. So we're going to fight about minimum wage. We're going to fight about states. We're going to fight about this, fight about that. In the end, it's not going to be $1.9 trillion. It'll be whatever it is, and then we'll have to look at the stimulus package. But all of that liquidity speaks to owning equities, and you go back to what works. Microsoft's really working. J&J, I want to be in the middle of healthcare. Anything to do with the consumer, I absolutely love. Facebook, it's a gift to get it pulled back of 8%. It's firing in every cylinder. Yes, I know we have to shut it down. It's evil. But you can't do that right now because it's running small business in America, period. Got to wait till we have something else. So that yin and yang's been going on forever. I just see it as a buying opportunity. I'm going to continue with the names that have really served me well and load up to full weightings on them.
Yeah, Pete, I mean, others do, too. Even if you think that there's going to be more, deleveraging or de-risking from hedge funds, which may go on for, some period of time. Mike Novogratz tweets today, I'll read this because it's important. I think it really represents the view that's widely out there. Most people I know, he says, in the equity markets are waiting to buy as soon as they think the deleveraging is over. The macro backdrop is still stocks higher, assets higher, tons of cash around, and an economy that will explode in a good way once enough of us get jabbed, speaking of the vaccine. That seems to be the prevailing view, Pete, that even if you think stocks may be in a period of turbulence or heightened volatility and they do pull back, there's a lot of buyers waiting to pounce in this market.
Yeah, I totally agree with that. As a matter of fact, I'd be one of those. I haven't trimmed back as much as I'd like to, Scott, and the only way I've been able to is I look at these names, and to Kevin's point, I look at a lot of these names. I like these names. I like where they're trading right now for the most part, so that's why I continue to hold on to them. And I've talked about, hey, I'm going to start trimming some of these equities. I trimmed a couple, Scott, but almost nothing. And so I think that the reality has been for me, how do I do this in a way that still makes some sense? I could take advantage of volatility. So when we talk about the VIX all the time, you look at those implied volatilities within the VIX. So the VIX was just trading in the 22s not that terribly long ago. Yesterday, we were 33. This morning, we were 33. That gives you an opportunity to use that volatility that has come back into the market and the implied volatilities of most of the stocks that I'm trading right now. It gives me a chance to sell right on top. So in other words, if normally in Apple I would sell about a 10% out of the money call a month out, let's just say, I'm not doing that. I am selling options against my long stock positions that are right on top of where we are. Now, that's going to make it a lot more difficult if we go straight up, but it also gives me a lot more cushion to the downside, and I'm taking advantage of the implied volatility in a lot of these various names that has risen by 5, 10, 15, 20%.
Who knows if we go straight up or not, right? Weiss, I'm curious for your perspective, not only on the Mike Wilson commentary today, again, saying that, if you're waiting a correction, don't wait because it's already here. And it's likely to get painful, at least feel bad. But there's no reason to think that you're in sort of bigger moment that's going to have a 2000-like upset, even as others are talking about some similarities that are to the year 2000 and that period, whether it's the heightened retail involvement or what have you. You do, as David Kostin says, have the biggest short squeeze in some 25 years. What's your view on where we are now as you hear from some of your colleagues on our committee today who are buying stocks?
Well, I've also increased exposure, but I've done it a little differently. I did it through some bull spreads on names that I own, like Qualcomm and Qorvo. So I'm very positive on the market. I think it's an okay conversation to have what Mike Wilson's saying, although I remember when strategists used to take the long view instead of trying to day trade the market. But I think you got to put that noise aside. You got to put the noise aside of Reddit. We're talking about isolated instances. We're not talking about a reckoning in the market. We're not talking about democratization of retail into the market as if it's just happening. John Bogle started that with Vanguard years ago. So we're seeing the trend continue, yes. But I agree with Mike Novogratz. What we're going to see is the fastest growing economy that we've seen in years and years. And the deleveraging has already happened. The degrossing has happened. We saw the biggest grossing in the quickest time in hedge funds since 2010. The level of degrossing is rivaling what happened in March of last year when COVID first hit and the panic ensued. So that, if you're waiting for that, don't wait for the bottom. You can't call the bottom of it. Now's the time to put your money in. But what you've got massive stimulus, whether it's a $1,000 check or a $1,400 check, whether it's an infrastructure bill that's $4 trillion or $1 trillion, you're going to see it all the time. As Jay Powell made clear, you have free money. So we're seeing some great earnings reports, particularly from technology. So I'm not surprised technology's up today. I was surprised it was down as much as it was last week, and it was a painful week for me, despite having some big winners there, like a Skyworks. Skyworks sells at a big discount to the market. So there's value there. Not everything is so overvalued. So my advice is ignore the noise, ignore the short-term maturations in the market. We just don't know what's happening there. You can't pick them. And just focus on the long ball and a burgeoning economy that's going to explode.